Hi guys, this is Sam for Wealth Wise by Samuel. Today we are going to talk about how to increase your current income and get that road to faster accumulation of wealth. So the number one thing would be how to increase wherever you are. If you're getting like $50,000, how to get to 80 or $100,000, and how do you accumulate wealth both actively and passively. So the end goal is to get 100% of wealth passively, but how would you generate currently the active income increment as well as the passive income accumulation so that you have the compounding effect. So let's talk about these two topics. So again, how to increase your current income and how do you accumulate wealth both actively and passively. So we'll talk about these two topics. The first, how to increase your current income. So number one, if you are in any profession, you would have to go out and become a specialist, an expert. So if you're an insurance agent, you have to specialize in a particular industry or a niche within that industry. It could be commercial, it could be residential, it could be storage. You need to start specializing. If you are a business person, you would have to get into a particular industry specialization, like example pharmaceuticals or retails or e-commerce, and within that you again need to super specialize, right? So if you're in pharmaceutical, you might want to specialize in compliance, or you might want to specialize in clinical research. So the first thing is to become a specialist in whichever profession you are, and that would help you to bump up your income once you are confident that you are specialized in that area. Number two, once you have specialized, you need to go out and talk to your current source of income, whether it's a customer, whether it's an employer, and ask for increment, saying, hey, I feel I contribute. And the base level of negotiation is numbers, right? So if you have given a better return on investment, if you have shown savings, either in terms of revenue or cost saving to the company, then as a specialist, then you can go out and ask for that bump up of your salary. And this will not be an increment, it'll be a salary reset to a different level, saying, hey, now I've become a specialist, so I need to get a salary of a specialist. And that should help you increase your current income. That's number two. Number three, and this is very commonly said, you can start a side hustle or side business. The one of the most common aspects for which you don't have to do anything is become an advisor or a consultant. Once you're, because assuming that you have specialized, you can go and register yourself in portal like Fiverr, Upwork, freelance workers, and try and get those assignments which will give you that extra wealth, right? But more important, in order to be known in the industry, you have to do something like I'm creating a video right now to get to that level of perception of public that I specialize in something, and hence they should recruit you as a freelancer. Number four would be investment. There are two basic investments that every person must do. So the number one investment is stocks, right? And the stocks again are mutual funds or ETFs. So exchange traded fund which measure the index, or index funds. It could be QQQ. It could be a high interest ETF like SCHD. It could be a reality fund like O. And then you invest in that, and then you'll get like two things. Like you'll get a bump up due to the rise in the stock value or the ETF value, and you'll also get a certain percentage of return. For example, SCHD, which is Schwab's high dividend fund, gives you 3.6. O reality fund monthly pays you 5.6, I believe, right now. And that would be the number one thing that you do in stocks. The second is you invest in something called debt instruments. The debt instruments are treasury bill funds like TMF, this is triple leverage market fund, or BND, which is bond. So those are debt instruments. The other ones are stock based. These are debt based. So basically they base themselves on treasury bonds, corporate bonds, and so on and so forth. And these are again offer you interest between 3 to 4%. That'll be a great thing to do. Number three would be currently, because the way interest rates have risen, there are special offerings both in fixed term investments by banks and financial institutions. So you can get close to 4.85% and sometimes higher, and you have to shop around to make sure you get the right interest rate. So again, investment in stocks, mutual funds, bonds, and fixed instruments would be the number three or number four thing that you'll do. So first we said invest in becoming a specialist. Number two, we said negotiate a higher bump up in the salary because now you are resetting your salary as a specialist. Third, we are saying starting a side gig or side hustle as a consultant. And fourth, investing in stocks, right? So let's move on to the next one. Number five is retirement fund contributions. So if you're in US, 401k, Roth IRA, or IRA is a good way. IRA is a deferral of your tax, whereas a Roth IRA or TFSA in Canada, Roth IRA or TFSA in Canada. Also, for the kids' education, you can invest in plans like RESP in Canada and equivalent in US. So that would be the maximization of your tax-free savings, interest-free accounts, both for online brokerage or a financial institutions, as well as investing in tax-deferred instruments like RRSP in Canada or IRA in US. Now, number six is a common sense thing, right? There are lots of people saying pay yourself first. So yes, you basically take a percentage of money out, let it be minimum 20% if you will, and invest in the stock instruments I talked about, or invest in the retirement funds contribution. So if you can do 20-20, that's 40% out of your $100, 40% goes there, and that's saying that live below whatever your circumference is in terms, or whatever your spread of money is. So if you're getting $10,000 on a monthly basis, you try and live within 6,000, and you do 20% in the retirement fund accounts, and you do 20% in the investment account. Now, number seven is debts. Debts are killing everybody. So I believe now, if those who have home equity line of credit pay roughly anything between 7 to 10%, depending on which country you are. If in US, you might be paying 8%, depending if it's a commercial real estate or commercial loan. If it's personal loan, it could be also equivalent. In Canada, it's 7.7% for home equity line of credit or a personal line of credit, right? So currently, you want to get rid of those high interest debt, and that's number seven. You have to get rid of those, or the best thing is to accumulate into one account, both in terms of your debt instruments. You just put everything into one account, so you pay one person. For example, if you have three line of credits or three loans, you put them all into one and then start paying off that quickly, right? So that's number seven. Number eight, which is ever proven strategy, is real estate investing, right? As long as you're getting the home below, there are two things, right? You have to buy it below the cost of building that real estate. So if it's a $1 million home and you have to build it, it costs you 1.5. It's a no-brainer. The second is the financial return you're getting it, right? So as long as you are paying lesser than what you're going to get in terms of rental, it's a good deal, because over a period, your interest or mortgage would keep going down and your rent will keep going up. So don't worry about too much of that. If you're getting 500 out of it and it's below the construction cost, great way to do it. Over the next 5 to 10 years, you'll feel that your mortgage keeps going up lower or keeps going down lower, and your rent will keep going down up, right? So the differential keeps increasing. The 500 will become 5,000 in next 10 years. And that is a great contribution towards becoming financially independent, right? Number nine would be automatic savings in investment. So which we call as recurring deposits. So you create, whether it's it's a brokerage account. You would do dollar cost average investment and do a pyramid strategy. So invest dollar cost when things are volatile, and when things are dipping, you do pyramid strategy. So basically, you do a little bit more every time your financial instruments go down, because they will ultimately go up all the time. Last but not the least, speak unbiased or seek unbiased financial advice, and plan your journey towards that either FIRE, which is financially independent, retire early movement, or even if you are a FIRE generation, you still got to have motivation to do something in your life. So plan for that, as well as have your insurance policies, and your estate planning done properly. So there you go, guys. These were the 10 areas that will really help you to build wealth. Please like and subscribe my channel, and let's go out there and accumulate wealth wisely. And this is Sam signing off for WealthWise. Thank you.